Hello and welcome to BIZ Talk. I am Danish Manzoor, and this happens to be our first ever virtual interview with a very interesting guest from a very interesting sector. As we all know, what the coronavirus pandemic has done to the world literally brought the entire world down to its knees. This sector, which is the real estate sector, is also quite badly affected. Now let's explore the impact of coronavirus pandemic in India, especially on the real estate sector. I have with me Anuj Puri, the chairman of ANAROCK Property Consultants. We've had him on the show before under different circumstances, and this time we have Anuj back here again. Welcome, Anuj, on the show.
Thank you very much, Danish. Congratulations on your first virtual show. I'm actually very excited, very delighted. And I remember our last interview, which was in a lot more pleasant times than the current times.
Absolutely. So the world has changed since then. Everybody knows it, as do you and I. At this moment, we have, in most of our around, say, 7 top metropolitan cities, around 78,000 onwards of unsold homes ready to move, waiting to be sold. There are no buyers. So let's get right into it and ask you this. Where do you see it going, and what has the impact been of the pandemic on the real estate sector of this country?
So, Danish, I would say it's been quite severe. Perhaps I would caveat it less severe than what I had thought. When the pandemic hit, I thought, Danish, that this was like the end of real estate sector in many countries, including India. As the lockdown is starting to open up, there are different things that are happening. Very interesting. Some of the sectors doing even better than before we went into lockdown. Some of the sectors really badly hit. The sector that is doing exceptionally well is industrial, warehousing, logistics. I mean, that sector on the real estate sector is really going up. Crazy institutional investors, lessees, a lot of the US manufacturing companies looking at India an alternative to China. So very exciting. On the other hand, retail really down in the dumps at this moment in time. Retail malls have started to open up, but very few footfalls that are coming in, and largely those footfalls that are coming in aren't really buying the premium and luxury where the margins are. They're really buying the essential. Somewhere in between these two is the residential and the office. Offices, we've heard, work from home. Many of the people have had very efficient ways of working. Yet many people are saying is that without getting into the office and without interacting with your colleagues, you're not going to be able to innovate. Gossip is essential part of any office.
Water cooler conversations, as we call them.
That's right. So, we will see how that impact is going to play up. Obviously, there is one positive impact on the demand for office with the social distancing. Many of the corporates are now asking for larger spaces to be able to house their existing employees, given it was 80 square feet per person, and today many of them are looking at 120 square feet per person. But definitely it has had a negative impact on the demand. I think on the residential, Danish, and that's the biggest part, and that's what your question was as well. We thought that nobody is really going to buy over the next 6, 7, 8 months. But we're finding 5, 6 things interestingly happening. One, that the demand has really hunkered down, which is not a surprise, but that is moving to quality developers. And their sales we are starting to see increase. So in a market which is getting reduced from the overall size, the good corporates who had done very good delivery of their products earlier are starting to show better sales. Maybe the interest rates at 7% on home loans is the lowest in 14 years. Many building societies differentiated between the tenants and the flat owners. There were strict rules for tenants versus the flat owners. Somewhere at the back of the mind of the mid-30-year-old couple is that, I want a little bit more safety. I want a little bit more security. I do want to own the roof over my head. So we're starting to see that there is, the site visits starting to happen of the first time home buyer, given the low interest rates and given that they are now wanting some kind of safety security in there. However, they are negotiating very hard on the pricing. And that's where we are finding that the expectation of the buyer, Danish, is that the price should have gone down by 20%, whilst the developer is willing to reduce the price by 5%. And I think once that bid versus ask, that gap gets bridged, many of these ready to move in. And, most of these buyers are wanting ready to move in inventory, not under construction as much. Yeah, very interesting. Ready to move in, maybe they were in small homes, they want better homes, maybe it was poor quality accommodation, maybe it was tenanted accommodation. They are more inclined to buy ready to move in homes and first time home buyers that we are starting to see.
Right. Now, Anuj, you spoke about there's a lot of friction between the buyers and sellers at this point of time, right? Everybody wants to negotiate the best possible outcome for their own selves. Now, looking at the average price rise change, which has happened like in the last quarter, like in the last 10 years, right? It's been really insane. With Pune having been around 67% hike in its, as compared to previous, like what was in 2010, in 2020, we saw around 67 odd percentage rise in the cost of residential property. Now, there was already a huge bubble which was created. Do you think that bubble has somehow been burst by this? And then it would ultimately now somehow regulate the pricing of residential real estate in, say, top metropolitan cities, where an average salaried person thought it was next to impossible for them to be able to afford property.
So Danish, I'll take the same example. If you look at it in 10 years, the price rise has been 67%. So it's been about 6.7%. I mean, your inflation is not today, but on an average, it's been 4-5%. So actually, if you were to look at in the real GDP basis, inflation adjusted, it's not that much of an increase in the price. Yet, I feel is there will have to be some correction by the developers who are over-levered, by developers who are not going to be able to hold on to the inventory versus the others. I think, Danish, very difficult to generalize that statement because there are a number of developers who have an ability over the next 12 months to be able to withstand this storm. And they are not necessarily going to bring down the price. Yet there will be others who have a huge amount of debt and they will be forced by their lenders to start to adjust the price so that the momentum of sales starts. One thing we need to be we need to understand from the developer's perspective, half of the inventory, Danish, they sold at a higher rate.
Right.
The balance half, when they start to sell at a lower rate, the guys to whom they had sold at a higher rate, they start to come to the developer's office and ask for the refund to say why did I pay you extra? For that, you can argue at that time the price was that, and today the price is different, but difficult to explain it to these home buyers. So it's not as easy to be able to just bring down the price. Certainly on the example that you gave, which was the ready to move in inventory, which is the completed inventory, because a portion of that is already sold and many people are living in there. And when they hear my next door neighbor has bought it at a 10, 15, 20% discount, they go running to the developer's office. And says, well, I need a similar discount.
See, that's going to happen in general. But do you think that it's a long-term solution for the developers to hold on to their inventory? And will they be able to hold on to their inventory in the long term?
I think that's the question. Absolutely, that's the question, Danish, is would they be able to hold? So as I said, there will be some who will be able to hold and who have enough ability from the cash reserves point of view, and they'll be able to deliver it. Yet there will be others who will not be able to do it. Danish, one thing is there, if you were to actually do the math and work it out today, if I was to buy a parcel of land at today's price and pay all the taxes on it and the stamp duties and construct it and the financing cost and the marketing cost, actually today's replacement price is higher than what they are selling it at. I mean, that's business, unfortunate. Unfortunate that they have to take a loss, but so be that case. So my thought is that the new properties that are going to come up will actually be more expensive than what it is being sold today. Otherwise, the developer will just not start a new project because your selling price today is lower than his cost if the project was to be started today. I think those guys who are in distress will want to cut it out. And exactly the question that you said is, do they have an ability to hold? Perhaps not. Perhaps the lenders will, ensure that they go out and sell, but yet there will be others who have an ability to hold, who are not that overexposed on debt, or who have the cash liquidity and then know exactly that the value at which they want to sell is the right value and not the distressed value.
Right. And distress sales being something that everybody in this market is actually looking forward to. Anybody who has the liquidity would love to go in for distress sales.
And as I said, Danish, these site visits have started to happen, which is encouraging. Yeah. Yet, on every site visit, the buyer is looking at that distressed valuation.
Right. Now, see, there are two important elements and two important players in this. One being the buyer, who most of them till now haven't been able to purchase because of the high prices. Now the market seems to be green for them at this juncture. On the other side, the developers. So we see people do talk about the buyers, but not many are talking about what the developers are going through. So basically, if the developers are going to keep suffering and they're going to keep incurring losses, there aren't going to be as many developments in future because they would not seem it to be very feasible. Many at the same time would argue they have made enough money, so why can't they just pump in? So it's a chicken and egg situation. Now, moving on to the developers side of things, what are the challenges which you have been observing that developers are facing at this point of time, and how best can these be mitigated so that the value is brought into both the buyer and the developer?
I think it's a very interesting question, and not many people have asked me that question. So I'll have to think through that. But it's a superb question that, on the other side, there are two stakeholders. One stakeholder perhaps is more important, which is the customer, the buyer. But there is another stakeholder who is the supplier, who is the developer. We often forget the supplier. We only look at the demand perspective. I would say, as Danish, there are 5 or 6 things, that they're really suffering today. Some of it which they've done on their own, some of it which has been imposed on them. What they've done on their own is the debt that they have taken on these projects. Many of them have overexposed debt on their balance sheets. What's the solution? I don't think so there's a solution on that. Is, maybe the lender will need to take a haircut. Maybe the developer's equity is got wiped off. Maybe there will be another developer who will come in the picture and complete the project and sell. So, those who had gone ahead and in a bid thought that the price will continue to go up and let me take more debt on that in the hope that the price of the project will continue to go up the selling price are the ones who have got caught out. That's the first one. Second is that what has been imposed on them is the government taxes, the duties. I think that has been really backbreaking in terms of the premiums that are being charged by various state governments when they acquire the land to convert it into FSI, the GST, the stamp duties is pretty bad on that. So, clearly that is one area where you're going to be seeing an impact, which is an adverse impact that has got on to that is. The third one is really their inability to have read the market early on. I mean, to your earlier question, should they have actually sold off at that time rather than have retained with the thought that, Danish, that the price will go up? And here I'm paying interest to my lender. I should have actually just, cut a deal with the buyer and got the money and paid the lender rather than paying the lender and the interest continues to mount. And on the other hand, my price is not increasing. If anything, it's only now going down. I think that's where it has got caught out. And clearly, we've not invested enough on technology to bring in faster buildings, nicer buildings, quicker buildings to be done on that is. And those are some of the things that we will have to bring in: financial prudence on the projects, corporate governance within the companies, technology, whether it's on the sales side, whether it's on the construction side. I mean, look at it, how we are doing today. I mean, this is fantastic technology use that we are doing this interview. Clearly, you can do a lot of it, even on the real estate side through that. And the last is, just building an organization. I would say is those are the four things, yet there are several developers. I mean, amongst the listed developers, you look at it, they've done a fantastic job of putting it all together. Whether you look at a Godrej or an DLF or an Oberoi or in your city, Danish. I mean, I have a huge amount of appreciation for those developers from Bangalore. Whether it's Prestige or RMZ or Embassy or Brigade or Salarpuri, you name it. They are the best quality developers with great corporate governance, financial prudence, discipline, respect for the buyer. In there is, and that is what I do feel is going forward. You're going to see not only that developments may shrink, number of developments, I think the number of developers may also shrink.
That's correct. And now moving on to one of the last points we'll discuss, hopefully, on the residential side of things, which is the home loan interest rates. They have come down, no doubt about that. But if you look at the global markets, you look at more evolved markets, the interest rates are much, much, much lower. We are still at least 4 times the interest rate that you see in US or you see in UAE for that matter. So what is the solution to that? And what should the developer community and the buyers do so that at least everybody comes together and even helps the banking and finance industry indirectly by them bringing the interest rates down, making it more attractive?
Yeah, and it is very interesting. Many people ask us is that the home loan mortgage rates in many advanced countries, Western world, is 1.5%, 1%, 2%. Here we are proudly saying is we brought it down to 7%.
Yeah.
So you're right. It's maybe 4 or 5 times of what some of the more Western countries have as a mortgage rate. But Danish, one has to really look at the inflation rate in a country like India. The borrowing, the PLR, we call it as at what Reserve Bank of India gives the money to the banks, which takes into account the inflation rate, and on the basis of that, you're really able to build up the lending rate. So I would say is it's very difficult for us to get down to 1.5-2% because we're still an inflation economy, we're still an emerging economy. So anything which will need to be done will be ahead of that number. So I would say is it will, my opinion is, continue to slightly come down even below 7% because inflation is down, demand is down at this moment in time. So you will continue to see, but whether it will get to those numbers, what we see in Europe or the US or Japan, unlikely, because our inflation rate will still remain ahead of their inflation rates.
Right. So now talking about another major issue which the world faces, again, home buyers. And this is affordable housing. Even though the prices have come down, a lot of developers are still building properties which are of much higher square footage than they ideally should have been. So smart homes, of course, many are doing. But do you think that post-COVID scenario will see an increased number of smart homes coming up which utilize the available space effectively?
I think we will see a transformation in the product, Danish. And those who do not realize this will be at their own peril. The customer over these last 4 months has gone through a lot of mind change. I won't necessarily say that they're looking at smaller because, Danish, we discussed this work from home. And, if you have a family, a larger family, you're living with your parents and in-laws and dogs and cats and domestic help and kids and spouse, you need a bigger area. For the first time, everybody is lived locked up for so many months and discovered that maybe we need a little bit more area. So I think the product definition, which was on a square foot, is going to move to a definition which you actually said is very nicely, is going to be on the design side, is going to be on the smartness. What is it that I can use? One of the designs that I saw, Danish, that has come out in Bombay, is that the floor to ceiling height is very high. So usually it's about 11, 12 feet. This is about 15, 16 feet. The thought is that during the daytime, can the bed go up and it becomes like a lounge? It becomes like a study to come in. And come late evening, you're able to bring that bed down. In that is, that's how people are really thinking, because your disposable incomes aren't going to go up. If anything, there have been salary cuts, rationalization, and disposable incomes have gone down. Yet there is an increasing desire to buy a home. The way that it will need to be really fixed up is on the product side. That how do I squeeze the ticket size? How do I bring down the ticket size so that it becomes more palatable to the home buyer, yet the home buyer's full requirements are met in that is. And that's for the first time, I think, is that the developers have started to do their study. Otherwise, in the past, Danish, it was what's my gut saying? My gut saying is that we should do this. And it would be done. Is now people are going back to the study table. They're doing their analysis. They're doing their interviews. They're doing data point collection to say is in our community, in our micro market, in our geography, what is the tendency? What is the behavior? What is the thought process post COVID as you come out of it, that the product will really need to be realigned.
Right. So centrally located properties versus peripheral properties. Where do you think that the value lies at this juncture?
But very interesting. Huh? I would have always said is centrally located properties. And in the past, I mean, I've been in business for 25 years. In the past, Danish, whenever there has been an economic downturn, first the periphery goes down, then the suburban properties go down, then the CBD, central business district properties go down. When the market comes up, first the CBD comes up, then it is the suburban, then it's the peripheral. In this pandemic, I feel it'll be more the peripheral, more the suburban. Why we are finding this in Bangalore? We're finding this in Hyderabad. People are wanting bungalows, villas, plotted schemes to have their own home and saying, I don't want to do anything with the building. I want to have my own space which I can control from a safety perspective. And hence, you can't really get in villas and plots and bungalows, within the city. I mean, you can if you're very rich, but largely you have to go on to the suburbs or the periphery, and that's where we're starting to see the demand come up. And this is not the real estate. So somewhere this pandemic has buckled the economics of real estate, where it used to be always the CBD property. And likewise, I think, is Danish, you will see in the offices as well. Yeah. Many of the corporates were consolidating offices and moving into IT parks. They will start to say is we perhaps don't need a consolidated office space, because what happens in this one building if it goes down, if there is something then happens, then our full campus is shut. We may actually want disaggregated space. We want to be close to our employees. Employees don't need to travel 1.5 hours to come to this, park of ours. Right. We want to be more closer to the employee's home, where they come in 20 minutes. So instead of doing 500,000 square feet, can we actually have 5 offices in the city of 100,000 square feet each? But the employee doesn't need to travel 1.5 hours to come to this park. We will do these 5 offices closer to their places.
Which would be a win-win for everybody.
Which is a win-win for everyone. Absolutely.
Right. Now with work from home, the concept of it coming in very actively, many international companies having already announced that they would go for a longer term or perhaps even permanently for work from home solutions. Now, where does that leave the office spaces, in the entire sector?
Yeah. So, as we briefly touched earlier on, that is Danish. It is a question mark. What is going to happen to the office spaces? I'm of a firm believer that you are going to see offices still continuing to expand. There will be many businesses outside the tech space where they would need human interaction. You will need to have the interaction with your clients. There will be people. There will be divisions within every organization which can work very effectively from home. But yet there will be businesses that would require additional office spaces, as we briefly touched, whether it's the water cooler discussion or the gossip or the innovation or just wanting to meet warm bodies. You do want to interact. We are, after all, human beings. We do want to interact
Not sure, not very sure how long this work from home situation will be. Will be very productive psychologically as well, your mental health wise as well.
That's right, yeah. And yet some of the people will be able to do it. I'm not disputing. There will be people, Danish, who will do it on a rotation basis. So they may come in 2 days a week in the office. The balance 3 days they may work from home, and hence you may not need that kind of office spaces required. But I'm saying to say is that office spaces would not be required at all. I think that is not going to be possible.
All right, Anuj, I think we moved on to almost the last segment of our chat today. So let's talk about the buyer again. What should the buyer be doing? It's a very difficult question, very tricky one for you, especially. You would want them to buy. But genuinely, what should the buyers be doing in this market? Should they be buying or should they be waiting a little longer and then taking a call to buy?
So I would say, Danish, if you're an investor on the residential, do not buy. I don't think it is an investor's market. I don't think you're going to start to see price rise coming back in a hurry. If you've got other arenas to invest, please go ahead and do that. If you're a large HNI, then I would say is buy in income yielding real estate like an office, and with great occupiers in there, go out and buy, because I do feel is that the yields today have become very attractive on that. But if you're wanting to buy residential for investment, do not buy. If you are an end user, I think there are great deals. Today is a time that you'll be able to get in and you'll be able to buy your choice. I won't say your price, but certainly there will be a deal to be done with the developer. So worth considering that buy today.
What about the NRI investors, people who live outside India and they want to get back to India, have a piece of the pie right now?
And suddenly we've started to see that, Danish. That has gone real bananas, if I can say, is the NRI demand, certainly from the GCC. Now, I don't know whether it is that because people are coming back and hence they want a roof over their head, which they own, whether it's that the rupees got devalued, and it's suddenly become more attractive, whether it's that they are getting good deals that they are wanting to buy. The Gulf market the demand has gone disproportionately higher than what it was earlier. So for the NRIs, I don't know whether it's the pulse that they're returning back for good, and that's why they're wanting to buy homes, or whether they're finding it a lot more attractive with a devalued Indian rupee. There's something that has gone positively for the developers in India as the NRIs continue to buy more.
And before we wrap it up, one last thing, Anuj, which is how can the government help this sector, be it buyers, especially the developers at this point of time?
I think there's three things I would say, Danish. One is really on the taxes. They generally really need to look at it, whether it's the GST, which is not a pass-through today, whether it's the land premiums that they're charging, or whether it is the stamp duties at a state government level. That's the first thing. Second is, and I think the most important part is that can you boost demand? What are those levers that can really help boost demand? Which is largely, the answer is economy. What is it that we need to do to kickstart the economy and have more jobs done? And the third is perhaps not as much the government, the Reserve Bank of India, which is really on the debt. The ask has been on the one-time restructuring given the pandemic, that the call will really need to be taken because the moratorium for the developers ends on 31st of August. Right. And after that, the payments start. But the economy won't have really started in its true spirit. So does the Reserve Bank of India allow a one-time restructuring for the banks to do on these loans, or it becomes business as usual for them?
Right. Thank you very much, Anuj, for this very rather insightful talk on the real estate sector in India. It was a pleasure having you on the show. And to all of you who have watched this show, please do go back and you might find some very interesting pieces of information, some interesting pieces of advice coming in from Anuj on the show. Go back, rewind it and watch it, and we will see you next time. Till then, do take good care of yourselves. Thank you very much for joining in.